Why some first-time buyers get approved and others don't. One of the most confusing things for the first-time buyers in Canada is this. Two people earn almost the same income. They look at homes in the same price range, they apply around the same time, but one gets approved easily and the other gets declined or approved for much less. This makes people feel like the system is random or unfair, but it's not random at all. Mortgage approval is a system, and once you understand how that system thinks, approval stops feeling mysterious. In this video, we'll explain how lenders actually decide who gets approved, why many first-time buyers get rejected, even with good income, and we'll give you a practical checklist you can follow to increase your chances of approval. The biggest myth about mortgage approvals. Most people think mortgage approval is mainly about income. They think, I earned enough, so I should qualify. Income matters, but income alone does not get you approved. Lenders don't ask, can this person pay today? They ask, can this person keep paying even if something changes? Approval is about risk, not just affordability. Once you understand that, everything else starts to make sense. How lenders actually think. When a bank or lenders looks at your file, they are judging three things. First, how stable is your income? Second, how do you handle debt and credit? Third, how risky your future looks. They don't care about your lifestyle, your intentions, or how badly you want the home. They care about patterns, consistency, and predictability. That's why two buyers with similar income can get very different results. Reason number one, credit behavior matters more than credit score. Most first-time buyers focus too much on the credit score number, but lenders care more about how you use the credit, not just the score. They look at, do you pay on time every month? Do you carry high balances on credit cards? Do you max out limits and then pay later? Someone with a slightly lower credit score but clean, consistent behavior often looks safer than someone with a high score but risky usage patterns. High credit utilization, missed payments, or frequent new credit applications signal instability. Reason number two, debt structure can kill an approval. This is where many buyers get surprised. It's not just how much debt you have, it's what kind of debt. Credit card debt hurts the most because it has high minimum payments. Car loans, line of credits, and personal loans also affect how much mortgage you can qualify for. Two people earning the same income can qualify very differently. If one has high monthly debt payments, lenders calculate ratios. If too much of your income already goes towards the debt, they don't want to add a mortgage on top. Reason number three, employment stability is huge. This is a big one for first-time buyers. Lenders love stability. They prefer consistent, predictable income over higher but uncertain income. A salaried employee with 2 years at the same job often looks safer than a contractor earning more money but with irregular pay. Self-employed buyers can still get approved, but they need stronger documentation, longer history, and sometimes higher down payments. Changing jobs right before applying can delay or reduce approval, even if your income increases. Reason number four, down payment source matters a lot. Many buyers don't realize this. Lenders care deeply about where your down payment comes from. Saved money looks strongest. Gifted money is acceptable, but must be documented. Borrowed money is a big red flag. If your down payment comes from a loan or line of credit, it increases your risk profile and can reduce your approval. Just want to see that you can save, not just borrow. Reason number five, timing mistakes ruin good files. This happens more often than people think. Buyers make big financial moves right before applying for a mortgage, just like buying a car, opening a new credit card, changing jobs, taking personal loans. Even if these moves seem small, they change your risk profile. Approval is not just about who you are, it's about who you are at the moment you apply. Why first-time buyers get caught off guard? Most first-time buyers start house hunting emotionally. They look at listings, fall in love with homes, and only then speak to a lender. By that time, fixing issues become stressful and rushed. The buyers who get approved smoothly usually prepare quietly months in advance. They understand the system before entering it. Practical checklist, how to increase your chances of approval. If you're planning to buy in the next 6 to 12 months, this checklist matters. First, keep your credit usage low. Aim to use less than 30% of your credit limits consistently. Second, avoid taking new debt unless absolutely necessary, especially car loans and personal loans. Third, keep your employment stable. If you're planning a job change, understand how it affects timing. Fourth, build your down payment from savings where possible and document gifts properly. Fifth, don't make major financial changes close to your application date. Sixth, speak to a mortgage broker early, not after you find a home. Preparation beats panic. Getting declined once does not mean you'll never get approved. Most approval problems are fixable with time and planning. The system is not against first-time buyers. It just rewards consistency and preparation. Once you understand how the lenders think, you stop guessing and start planning. Mortgage approval is not luck, it's structure. The buyers who get approved are not smarter or richer, they're simply prepared earlier. If this video helped you understand the system better, share it with someone who's planning to buy their first home. And if you have questions about your situation, ask them in the comments. Clear knowledge saves stress, time, and money. Now, if you're watching this video till now, you are obviously a first-time homebuyer, which is great because specifically for you, we have a system to help you get the best properties, best deals in the best cities of Canada. You should get in touch with us. Our contact link are just below in the video description. Thank you so much for watching this video and subscribe for more.